For more on how China's economy performed this year and what we might expect in the months to come, I'm joined now by Dan McClory, who's in Irvine, California. He's Managing Director and Head of China at Boustead Securities. Dan McClory, thanks very much for joining us. Projected growth for China will be 6.6% for 2018. What's your assessment of how the Chinese economy performed this year?
I think the best analogy to make, Anand, is this whole concept of deceleration. And, you know, we've seen Usain Bolt run the 100-meter dash, and at the end, he appears to be pulling ahead of all his competitors. He's actually not. He's just slowing down slower. So that's precisely what's happened with the Chinese economy. So the growth is at a strong overall rate. We're just used to higher levels of it. So I think that 6.5 to 6.6% number is good. But as we heard in your open, one of the trends that's clear is trade is not driving the Chinese economy. The Chinese consumer is.
How has the trade dispute with the United States impacted growth for the Chinese economy?
I think it's been much more psychological than it has been actual. As we know, when you look at Chinese exports to the U.S., it's something like 4% or less of GDP. And U.S. imports to China are around 1% or less of GDP. So in absolute numbers, it's not a big figure. But when you talked about, you know, global chaos and, you know, the attitude or the feeling that it gives people, I think that's had much more of a drag and a hesitancy effect than actual economic numbers and reductions would have.
Now, China has been retooling its way forward. It's been tweaking its plans, moving more into innovation, more into the technology sector. How do you see that expanding? What does it do for China?
Well, I think China's playing to its strengths. As we know, China leads the world in many, many categories. You know, e-vehicle unit sales, for example, you know, tops in the world. Retail, e-commerce, dollar sales leads the world by a wide margin, something like 43% of the world. So I think China continues to build on where they've taken a leadership position and move into other areas. We always hear about artificial intelligence. We hear about machine learning. These are areas of emphasis, but I think they're outgrowths of the strengths in some of the other areas, such as payment systems, you know, that are taking place and completely bypassing traditional channels. I think you'll see more of the same in 2019.
Something else that China did just a few months ago was hosted that import expo in Shanghai in a bid to increase imports, of course, into the country. Where do you see that going?
Well, it was unfortunately timed because of the back and forth between Mr. Trump and Mr. Xi. So I think it didn't have the full luster or even participation of a lot of nations that it could have had. And again, I see the trade wars, I see this as blowing over. I see it as being somewhat overhyped. So I think next year's edition will be even more telling. I think it's a strong foundation that it built on, but it could definitely do better in terms of further global participation.
What are the pitfalls that we should be looking for, Dan?
It's trying to continue to manage a shift from quantity growth to quality growth, while at the same time managing risks. So in the past, China has done the growth engine by infrastructure spending, loosening policies on lending. And we know both of those are areas of very, very extreme importance and attention. So the lending practices and risk management is of paramount importance to China. So that has to be kept in check, and I think it will be. So there won't be the unbridled growth that maybe we saw post-global financial crisis, but you will see money starting to come into infrastructure projects.
Do you see any kind of a quick resolution to the dispute with China over trade, given that there is quite a bit of uncertainty both in China and the United States?
I really believe that the trade dispute, the trade wars, and the banter back and forth, especially from the U.S. into China, has been put forth as a way to gain leverage, a bargaining chip, a negotiating tool, and that the ultimate issues will arise and be resolved, and the trade wars will kind of fall off to the side. But I can't disagree with you about the debilitating effect it's had for companies thinking about foreign direct investment, for shifting of supply chains. So until it's clarified, it's still going to be a factor, but I do believe it's going to be clarified. I don't think we're going to kick into the higher levels of tariffs come March. I think it will be put away by then.
There also seems to be quite a bit of sensitivity here in the United States, Dan, over Chinese plans in its technology sector, especially over the Made in China 2025 program. How does China meet those U.S. concerns?
Well, I think what the U.S. has said about those concerns, Anand, is that if it amounts to a state subsidy and a greater emphasis on state-owned enterprises, then that's an unfair advantage. So I think on the surface level, that's what President Trump and many others have a problem with. So I think the degree to which, back to my comment about playing to China's strengths, that spreads and that change and that continued investment takes place through some of the world-leading private sector companies that China has, I think it'll be much better received. If it's shown to be an instrument of the government, which to this point it has not been, then I think it's going to be open for greater criticism. Right. But let's feed the strong and keep going with all of those global leaders that China's produced.
And very quickly, Dan, what are the benchmarks that you will be looking for in the coming months, coming year?
Well, something that I know you're going to cover in a subsequent piece that a lot of people overlook is capital market activity. I mean, that's what we're involved in as an investment bank at Boustead. And you've seen Chinese companies literally leading the world in initial public offerings. I think you're going to see a greater pipeline. China's domestic IPOs are about at capacity with around 400 a year. So I think that's a very good gauge, a very good parameter of the search and the use of capital by creative Chinese companies, and somewhere around 50 of them listed in the U.S. this year with between $8 and $9 billion of capital that's raised. And we really don't look at that as a Chinese export, but in fact it's become one.
Yeah, that's right. We will be reporting on that a little later in the show. Dan McClory, thanks so much for joining us.